Diamonds might well be a trader's best friend, but in fact you are going to discover that your better friends are the circles and whiskers that you see on the charts. In this video, I'm going to start touching on how you can apply your Hurst cycles analysis to your trading. The first thing I should say is that there are as many different ways of trading on the basis of a Hurst cycles analysis as there are Hurst cycles traders. It's a very personal thing. Everybody has their own approach, and I'm sure that you will develop your own approach. And so what I will be doing in this video is giving you a few tips about how to understand the analysis and start converting that understanding into the process of making trading decisions. So why do I say that the diamonds are not necessarily the most important thing that you're seeing on your chart? Of course, the diamonds are useful and they are the basis of everything that the Hurst cycles indicator does, but what they do is they provide us with confirmation that a cycle trough or peak has formed in the market at that particular time. That's information about the past, and that information about the past is very useful because it is used by the Hurst cycles indicator to give us an idea of what to expect is going to happen next. Of course, when we're trading, that's what we're doing, is we're trading on the basis of what we expect to happen next. And so the circles and whiskers are really more important in terms of helping us to understand what to expect next. So let's take a look at the circles and whiskers. This is a 1 hour chart of the euro to US dollar. I thought that I would start with a very basic example of what these circles and whiskers are. The circles represent the exact time at which a trough or peak of a particular cycle is expected to form in the market. And the whiskers, the lines to each side of the circles, represent the range of time in which that trough or peak could reasonably be expected to form. As I've pointed out in a previous video, the circles themselves are very powerful because often turns in the market form at exactly those circles. But when you're looking at your Hurst cycles analysis, what you're going to be looking for are clusters or combinations of circles and whiskers. And we have one here at the foot of this chart. It's a very simple one, as I've mentioned. It only indicates 2 cycles. It is a 2-day and a 1-day cycle trough. But the important thing is that those circles are fairly close together. You can see the circle for the 2-day cycle over there, and the circle for the 1-day cycle is just below it over there. These clusters of circles and whiskers are called nests, either nests of lows in the case of troughs or nests of highs in the case of peaks. And they are very powerful and very useful things to observe on your charts. Nests of lows always look like small triangles standing on one of their points. That is because the range of time for the longer cycles in which the next trough or peak could be expected is of course greater than the range of time for the shorter cycles. And nests of highs for peaks look like triangles hanging from one of their points. What does this nest of lows tell us? It tells us that we have some cycles that are running in sync because those circles are fairly close together. Because they're running in sync, it increases the likelihood that a trough of that particular cycle is going to form at that time. The important thing when you're looking at a nest of lows or a nest of highs is how many cycles are involved in that nest. The more cycles are involved in the nest, the more powerful the turn is likely to be. Let's take a look at some shorter time frame charts and see how that particular nest of lows for the 2-day cycle looks on the shorter time frame charts where we have information for shorter cycles. We'll step down to the 30-minute chart. Here you can see the same nest of lows with the 2-day and the 1-day cycle, and now we have included one of the intraday cycles, which is the 5-hour cycle. So there you can see the nest of lows. We have a little bit more detail, and we can probably refine our expectation of when that trough is likely to form. The 30-minute chart doesn't give us a great deal more information, so let's step down to the 15-minute chart and study that in a little bit more detail. Here we have the circle for a 5-hour cycle. Now that circle is about over there. That's not a very straight line, but it's about over there. Here we have another circle for the 5-hour cycle. And we have our nest of lows, which includes the 2-day cycle trough and the 1-day cycle trough, and one or other of these 5-hour cycle troughs. And as time passes, we'll probably find that a third 5-hour cycle trough might be included in that nest. So what we do is we take a look at this nest of lows and we start drawing some lines or trying to understand what the nest of lows is telling us. I'm going to first of all draw a line from this 5-hour cycle circle to the 1-day circle to the 2-day circle. Now that line gives us a range of time in which this 2-day cycle trough is expected to form. It's still a little bit spread out and scattered. As you start working with these circles and whiskers, you're going to find that some of them are just perfect. The circles line up absolutely on top of each other. That is what happens when the cycles are really clear in the markets. And making trading decisions at times like that is generally a lot easier because you have a lot more confidence about the cyclic picture. There are other times when the nests of lows or highs are a little bit staggered and they're a bit broken apart. That's because not all of the cycle information is absolutely in sync. So there's one possible line. Let me draw another. If I use this 5-hour cycle circle over here and then draw a line to that 1-day cycle circle and then to the 2-day cycle circle, you see you get a staggered line like that. So what we're dealing with here is a staggered or slightly broken up nest of lows. Not an ideal trading situation, but there are several conclusions that we can reach on the basis of this nest of lows. First of all, take a look at each one of the circles that we are presented with. First of all, there's this 5-hour cycle circle, then there's the 1-day circle, and then there's the 2-day circle, and this other 5-hour circle. Remember that circles themselves are very powerful, and at the time or within a narrow range of time surrounding each one of those circles, there is a high probability of a turn. Because we're within range of a 2-day cycle trough, any one of those turns could turn out to be the 2-day cycle trough. But which one is more likely? Well, the more likely one, using the information that we have available to us, is, I expect you can tell, this one over here. Because we have two circles from different cycles that are very closely matched. That is going to be a time that you really want to be standing by or paying attention, because it is a high probability time for the 2-day cycle trough to form. Having said that, that is our highest probability time in my opinion, but we do also need to be standing by because we have two fairly closely aligned circles over here for the 5-hour and 1-day cycle troughs. Cycle analysis and trading is not an absolute science, it's an art. It's a skill that you can get better and better at, and it's a matter of dealing with probabilities. What Hurst cycles do for you, and what these circles and whiskers do for you, is they allow you to stand by and be prepared for turns in the market. How you trade those turns is of course up to you. Some people like to trade the moves down into the troughs. Other people like to wait for evidence that the trough has formed and then they trade the move out of the trough. Let's take a look at some other time frames here. Let's step down to the 5-minute time frame. And here we can see the nest of lows that has been developing around this first 5-hour cycle trough. You can see the nest of lows over here. And now that I've drawn over it, you can't really see it, so let me get rid of that. Let me point out again the power of the circles. Here is a circle of the purple cycle. I think you can see right at the bottom there. And here, just 5 minutes before that circle, a trough has formed in the market. Do we know that that is the trough of the 1-day cycle? Well, not yet. Not yet, but we are standing by for that trough to form. And we also know that the 2-day cycle circle, which is also a part of this nest of lows, is off to the right of this chart. We can't see it here because we're looking at a 5-minute chart, and so the circle itself is off to the right of the chart. And of course, when that happens, the indicator doesn't draw this whisker all the way across your price action, because then it tends to obscure the price action and it confuses things rather than clarifies things. Let's step down to the 1-minute chart as a matter of interest and take a look at the same circle and whiskers and see what is happening here. And in fact, let's zoom in so that we have a little more detail. Here you can see the circle for the 5-hour cycle. Here's the circle for the purple cycle over here. The purple cycle is of course a 90-minute cycle, and we have a very typical situation where you have a trough forming very close to a circle, then it bounces up, and the 1 degree shorter cycle then finds itself another trough at that position over there. A very typical situation playing out. So there is clearly some kind of a trough forming here, but it might be premature to jump to the conclusion that this is a 2-day cycle trough. Circles and whiskers, you are going to find, are very powerful, and you're going to be paying more attention to your circles and whiskers than you will be to your diamonds, probably, I expect. Let's take a look at some even longer time frames and see if we can find some circles and whiskers on the longer time frames. Here up at the top of the chart we have a great, very well aligned circle and whisker pair or nest of highs for the 2-day cycle, so that's definitely going to be a time to look out for that 2-day cycle peak forming in the markets. And here down at the foot of the chart we've got a fairly good, not very staggered nest of lows for the 5-day cycle trough. Let's take a look at our daily chart. You can see that the circles and whiskers apply at all different time frames, and here we have several interesting circles and whiskers forming nests of highs and lows. Here's a 10-day nest of highs for a 10-day peak. A little bit staggered. You can see those circles aren't perfectly aligned, indicating that the cycle wavelengths haven't been absolutely in sync, but it's nevertheless a fairly good nest of highs. Here's a very nice nest of lows at the foot of the chart for a 10-day cycle trough. Can you see how neatly in line those circles are? That gives us a very high probability time for a trough to form in the market. And here you can see the beginnings of an 80-day nest of lows. A little bit staggered. We've got an 80-day circle over here. There's the 40-day and 20-day circles, and somewhere in between them are the 10-day and 5-day circles. But that's definitely going to be a time to look out for an 80-day cycle trough forming in the markets.